Andy Carlisle, Managing Director for Aviation at LeighFisher, gives an update on the latest developments in the airport sector, starting by looking back at the main events that have taken place in the last 18 months.
Well, there's been quite a rebound in the market, quite a lot of transactions going on. Two main types of transactions I think we'd see. Certainly in Europe and in mature developed markets, there's been quite a lot of secondary sales, some of those sort of forced by regulation, Competition Commission, thinking of Edinburgh and Stansted. Some of those to do with owners of assets looking to change their whole portfolio. I'm thinking there of sort of Hoptive airports, which that portfolio sold, and also thinking of Abertis recently. And then we've also had kind of sovereign debt issues starting to come to play with things like the Portuguese airports, who effectively were pretty much mandated to sell their airports to sell it. That's in mature markets. If we think of sort of more emerging markets, you've then got a completely different story really. You've got a lot of growth, a lot of new infrastructure that's needed, and really those countries are looking to raise external funds to invest in new infrastructure. So it's a different type of deal and different kind of ownership. They're the two main things we've seen over the last 18 months.
And in terms of valuations, are we now entering bubble territory, or are they still being realistically priced?
There's certainly been a rebound in valuations. I mean, when we look back, so the long run average for airports is somewhere in the sort of 12 to 14 times EBITDA kind of valuation period. Up to the financial crisis, we were seeing sort of bubbles rising up to 27, 30 time multiples, which really was unsustainable. That came crashing down. Gatwick was probably the low point, where it was 9, 10 times. But that was obviously very much driven by the fact that there was a very tight credit market, which really constrained that deal. The deals done over the last sort of 12, 18 months, we've seen probably in the 14 to 16 times range. There's a lot of good reasons behind all of the sales that suggest either there were particular characteristics of that airport, thinking of Edinburgh as a capital city that meant it had particular unique characteristics that would lead to a stronger valuation, or where actually you've got bidders who have a particular strategic reason, thinking of someone like Vinci and the ANA airports in Portugal, where they had the opportunity to buy a whole country's airport system. That in itself commands some sort of premium. So it's very difficult to sort of generalise these valuations, but there certainly has been a rebound. We don't see at the moment that there's necessarily going to be some massive explosion or new bubble, and I think there's still a lot of getting lending and debt into the process is still obviously very difficult. The markets are moving, and there seems to be no barrier there. But obviously lenders are looking at everything with very close scrutiny, so I don't see the conditions where valuations will explode unreasonably.
Is it a case that geography dictates the pipeline or shapes the pipeline?
Very much so. Really coming back to the point about see probably two different parts of the market. Mature markets where, in particular, Europe and Western Europe and the UK, where you haven't really got any growth. So there's no growth that's generating sort of a need for new infrastructure in the system, but you are seeing a demand for sale from either reducing leverage or selling stakes or looking to exit the airport market. So that's one side of it. But certainly in emerging markets in Brazil and India and across Asia, there's a massive demand for new facilities, either because the existing facilities are underinvested, need to be refreshed, replaced, which requires massive amounts of capital, and therefore increasingly those countries are looking to the private sector really to lead that. But they're setting different rules to the game. They're very much interested in making sure that rather than just being a straight sort of financial process, that there are passenger standards put in place such that they actually deliver what they want out of it. It's not a pure financial transaction for them. It's actually more about delivering new infrastructure, rather than in Western Europe it's much more of people for whatever reason wanting to sell or buy airports. So it's a slightly different approach.
And linked to that, has the profile of the airport investor changed?
I think one thing we've seen certainly in the last 3 years or so has been really a much greater demand for operational expertise coming in. We've seen a variety of, there's a very broad spread of different investors who are interested in airports, ranging from infrastructure funds to big conglomerates, to increasingly pension funds, sovereign wealth funds for strategic reasons, are very interested in minority stakes. But a lot of those now always team with an airport operator. So you've got people like Manchester Airports Group increasingly teaming with IFM, for example, after their recent association. We see Fraport often team with infrastructure funds to bid for airports, and a whole range of others. And a lot of that is driven by the fact that now you see bidding processes where there is a demand for not just the capital, but the capital and operational expertise. So if you think in places like Brazil or India, there was much interest in having the private capital come in as particular levels of operational expertise so they can raise their own standards, both through funding new infrastructure as well as through new operational techniques and to learn from the process. So that, I think, has been one of the key changes.
And looking at 2014, where do you see the next deals coming from?
There's a number which are either running or just about to start. In Europe, we've got the AENA sales, which is likely to be some sort of IPO with Madrid and Barcelona. Very much involved in the mix. This obviously was a process that started, was attempted a couple of years ago, but the deal wasn't right. So that's being currently worked on and looked at by government. There's also Greek regional airports. That sale process has just started. They've just shortlisted seven bidders, so that will be something a little bit different for the market. In the emerging markets, we've got a second round of Brazilian privatisations, which is ongoing at the moment. And there's some new processes just starting in India related to Chennai and Lucknow, and there will be some others we expect as well. So really a broad spread of potential transactions, as well as some potential secondary sales in the UK market. And there'll always be some which you can't see or anticipate.
And then much, thank you.
Thank you.